I have too much shit to do. All right, so 420. Yes, coming in a bit short of its upside implied move, but about 80 points on the day, which keeps realized volatility down. We probably had a lot more dispersion trading going on today, and more index vol shorts coming in. So we ground up real slowly through what I described previously as a bunch of upside resistances, but we did get the push out to 69.50. Which was was like the expected high for today. So I would say everything kind of lined up. We definitely got opened above 69.10 where we wanted to, and then bulls caught the upside move above 69.16 as volatility bled off. Out here, that puts us up at 69.63, still short of a reversal on the prior drop, but getting very close to a retest of the trend up at like 69.78 or so, where we failed previously. Dollar pulling back a little bit today after 2 days of straight gains. I think this actually wipes out most of the upside move in the dollar over the last couple of days. Yields on the 2s and 5s moving up, a little bit on the 10s. And then the 2030 also sliding up a little bit, but not nearly as much. Commodities, well, silver is continuing to do well, but gold's kind of stabilizing around the 5,200 level. Oil came down a little bit, back under 66 a barrel. Otherwise, not a lot of big moves there. Copper did okay today. Correlation did grind down, kind of where we expected last night. Not as much, and mostly on the 3-month, actually. Well, bigger move in 3-month correlation than 1 month, but 1 month down too. So a lot of dispersion trading setting up going into NVIDIA's earnings, which is expected. 3-month correlation down, but bond volatility actually holding up now, which is interesting. Leverage on the carry moving back up. Forward yield on volatility down. Leverage on the front end still around 7x. The surplus on silver moved barely negative yesterday with a little bit of a drawdown and then kind of popped back up again today. This looks like it's getting kind of tight. And maybe it's going to squeeze again. There is definitely a pretty continuous consolidation in these silver sell-offs, that might start to lead to it just continuously pushing the upside. So maybe it's kind of interesting. I don't know if it really means much, but skew flat. Breadth, a little bit of recovery in the 200s and 50s. 20 days bounced back, probably a bunch more today. Although I don't think breadth picked up a lot. Russell and Dow only up 50 points, most of the move today in NASDAQ. So, this is your clear indicator that everyone's just betting on NVIDIA earnings right now. Nice, man. No change in Fed fund futures. 10-2 moved back up a little bit. So for IORB starting to get a little wider. Now remember, as we get into the end of this week, Thursday, Friday, this spread's going to widen and into the start of next month as short-term cash demand picks up. And that has been leading to end of month, start of month sell-offs. So as we're nearing prior highs, keep an eye on the SOFR IORB spread and look for opportunities for longer dated puts, because we're not from February to March we're not going to have any Fed policy change, and so theoretically demand for cash at the front end should be roughly the same as what we saw at the start of Jan. Which means that there's an opportunity to catch some of the equity sell-off risk asset sell-off as it's converted to cash in into and after the window dressing period. So that can be like a bit of like not regulatory arbitrage that you can capture, but just market mechanic arbitrage. So if we do get a situation where puts become excessively cheap over the next day or two, it could be a good idea to have some longer dated ones. And also if VRP on the front stays really high, which I don't think it will be after today, or at least not too much, then it could also be an opportunity for like put spreads, which are, financing very nicely right now. Out here, and second day of decline in correlation, but still relatively high, falling back to 91%. So we're still seeing a lot of vol shorts come in. Maybe too many, but I would say that these moves are shallow. So, they're not really pushing volatility down, at least not out, on the VX expiration. So still a little bit of fear floating around and selling too much vol. Leverage is pretty much unchanged. Volume today was okay, but less than yesterday. And that could be, as we see buy volume decline, that could be a sign that we're getting closer to being due for a pullback. So that's why we watch that, I guess. We broke out above and closed above the 20 MA, leaving a gap to the downside. However, these kind of breakouts, if they fizzle and they don't continue to break out higher, it can be more like an island top, and they kind of pancake and price action fails eventually. So we'll see what happens here. Obviously, all of this leading into the most anticipated earnings of the S&P earnings season, and so we'll see what happens tomorrow. But I would imagine a lot of volatility on the equity side is going to get crushed, because I don't think Nvidia is necessarily going to miss, but I don't think they're going to do anything super exciting tonight. And then here, financials and tech services pretty flat. Electronic technology doing well today. Retail trade, consumer durables, producer manufacturing. I kind of want to look at the multi-day performance. So financial still lagging on the week, but tech doing well. Tech services, mixed. Retail also mixed, with the exception of Amazon, which is just another hyperscaler and really should just be over here. But the pullback in consumer services is also interesting. Anyway, that's what I got for you guys today. Oh, and the 10-year JGB is at 2.13 now. So that looks like it's starting to move back up again. And I will catch you guys tomorrow. So I hope you all have a great night. Later.